Hello, trading world. It is aftermarket June 8th, 2022. And I guess you can say this is the pre-market report. I wanted to touch on some things before tomorrow, or before the overnight session happened, because we're getting to that point where the overnight sessions and pre-market are very important to, or as to what plays out during the day. I wanted to make a big point about 50-50 days and the technicals behind them. Most traders nowadays are either fundamental based or technical based traders. I like to think that the chart is where technicals, fundamentals, and quants meet. Fundamentally, the next 2 days are winding up for a big move. The fundamental evidence are the reports due over the next 2 days. The first coming tomorrow, which is jobless claims, and then the big one, which is CPI. Jobless claims could move the market, and here's why. If unemployment is on the rise, that indicates the economy may be weaker because there are fewer jobs available due to less growth. In this case, the Fed may act to stimulate growth by tampering with rates. In normal times, this would mean lowering the rates. But who knows what's going on right now, because these aren't normal times. Now, the CPI will move the market, and here's why. A strong CPI points toward higher prices and rising inflation, which may induce the Fed to raise rates. That's the fundamental side of things. Technically, we are trading in a range that is compressing. Imagine a spring being compressed tighter and tighter and tighter. Eventually, it's going to expand quite violently. That's the same thing that's going to happen to price action the end of this week, which is pretty soon. On the chart, the areas between 411 and 407 are where the spring is at its most compressed state. If you look at it, we've been basically within about a 12-point range on the SPY, from, we'll say, about 418 down to 406. That's a 12-point range. If you divide it in half, that's 6 from the 418, that puts us right where? 412. Where did we close today? 411.22. Close enough. So we're at that, we keep winding around this tightest point of where the spring can be compressed, waiting for this violent move. Now, on the quantitative side, the SPY started the week with an expected move of plus or minus 10.191, and we started the week at 410.54. Where are we now? Almost in the same place we started. with an expected move of plus or minus 6.492 with just 2 days left in the week. So now let's recap this. Fundamentals are saying a big move is coming behind the reports, Jobless and CPI. This could be the spark to the move. This could be what sets that spring loose. The quant side is saying the market is waiting to explode as well, being that we had a 10-point move, a 10-point expected move with 5 days to go, and here we are with just 2 days left. 2 days left, and we're still sitting on a 6-point plus or minus expected move. Now, let's take a deeper dive into technicals. Something that I use a whole lot is the volume profile. That's this aqua shaded area over here. And if you don't know much about the volume profile, a crash course real quick. The areas out here, this tan line here, and everything in between is called the value area. And this red line here is called the point of control. And the reason it's called the point of control is because this is the node, and all of these little bars here are called nodes. This is the highest node, meaning where the most volume or activity is. And we pretty much closed today right on that node. When we close on the node like that, it virtually gives me no directional bias whatsoever. So when I say 50-50 day, 50-50 we could be bearish, 50-50 we could be bullish. That's exactly what it is. Now, the lower time frames, the 30-minute, the hourly, are closer to oversold territory, nearing the lows of its range. And as you can see, this is an RSI here, and we're closer to that oversold territory. The higher time frame, like the daily, it's at that 50-50 level. But because we've protruded over and because of other indicators that I may take a peek at, I'm going to say it's closer to its overbought territory. And it's nearing the top of its range, the top of its current range. The weekly is starting to consolidate from the lows of its range. Let me bring up a weekly here. All right, and here we have the weekly chart. Like I say, it's kind of touched its oversold area and it's starting to consolidate, and we know it's consolidating because the MACD is starting to flatten out. All signs point to an explosive move with no real directional bias. So it sounds like everything is waiting on data from this CPI report, basically. So it kills me when people have an argument about being fundamental and how technicals don't matter, and technical people kill me saying how fundamentals don't matter, and quants are just everywhere saying neither side matter, because the only thing matters are the quantitative measures. And clearly right now, everything, whether it's technical, whether it's fundamental, whether it's quantitative, all trading sides are lining up for a big decision. And if you can't see how all of this is lining up together, then you have to be blind. And this is the same reason that I say when someone asks what type of trader I am, and I have to say I'm about 80% technical with maybe 15% quantitative and 5% fundamental, or some conglomerate of the three. Because there's no way to get a clearer picture with just one. Now, I have a few rules. And one of those rules are to never short an expanding MACD. And right here on the daily chart, we have an expanding MACD. We may be getting a little bit of a flatten up, maybe the first part of it getting ready to flatten out. But for the most part, my rule is never to short an expanding MACD. And this is definitely still, in my eyes, an expanding MACD on the daily chart. Give it tomorrow, we may have a little more flatness here. But as of right now, it's an expanding MACD. Now that expanding MACD doesn't say, or it doesn't mean we won't see a little more downside. It just means if you're trying to put on a new short, it's not worth the risk, because it could blow up in your face very big. Now at this moment, it's about 8:40 p.m. Eastern Standard Time. The 30-minute chart is in control, followed by the hourly, then the 4-hour. The 4-hour right now to me is key, because it's in the middle of its range, and its MACD. Let me get this off of the chart so I can get that 4-hour chart up. And here we have that 4-hour chart, and its MACD is right near the 0 line. So every signal that you can look whether it be fundamental, whether it be technical, whether it be quantitative, are all lined up saying loudly, we're waiting on reports. And however the data comes out from that report will be the determining factor of not how explosive, but which direction we explode in. So I just wanted to kind of put that out, the pre-market report before the pre-market. And again, like I say, that rule about not wanting to short an expanding MACD, again, it's not to say that we won't have any more downside, because I am still short some positions. But that tells me with the 4 hour where it is, that we're at a decision point, and you have to be very comfortable with your risk if you are still wearing short positions. So, and I may be still wearing short positions because I see tomorrow morning may be a point to cover them. And we could possibly get a play, because I've been waiting. I pointed to this Andrew's Pitchfork channel that I have drawn here on the 4 hour. I've pointed to this a couple times this week. I'm waiting for a pop to test the top of this channel. And that pop, when it happens, I will evaluate it then, but at some point in time around there, I imagine it's going to be a good time to re-enter short positions. So I just wanted to kind of explain the things that I see. A lot of people asking me about charts, about technicals, and it's not just the technicals, it's the marriage between all three. And then this just kind of gave the perfect opportunity to kind of point that out. So I just wanted to get that out. I will probably do another video in the morning with the pre-market levels. But again, just wanted to take the time to point something out in how all of these three areas of trading all line up right now. With that being said, please know and understand your risk. To me, it's the most important part of being a trader or a profitable trader. And as always, wishing you a profitable day. Have a good night.